Let's take a trip back in time. Actually, not that long ago. The Biden administration, once upon a time, pushed to tax wealthy Americans more on the assets that they owned, like retirement savings in their house, rather than just their income. That idea went nowhere in Congress. But there are 7 states, California, Connecticut, Hawaii, Illinois, Maryland, New York, and Washington, that have now introduced wealth tax bills that try to do the very same thing. Guys, isn't this a good reason for us to be up on the latest tax laws to do our tax planning?
It really is. And I think now it's February, we're starting to get our tax documents. This is an area where it always becomes top of mind, where people are conscious of taxes. One of the things that it's been my experience in the past is, people oftentimes will have this as an important topic. They'll gather all their information. They'll meet with their CPA or their accountant, or they'll do it on their own online on their computer. They'll get their taxes done, file their taxes, and kind of shove this information away. One key takeaway for this is, remember, there's a judge, I believe his name is the Honorable Learned Hand. Mm-hmm. And what he said is there's 2 systems of taxation in the U.S. It's one for the informed and one for the uninformed. So if you're looking to try to keep the government away from your money and minimize the amount of ways that they tax you, one of the ways that we could help you is we could create a 2023 tax roadmap. Now, I'm not talking about looking at preparing your taxes for last year. There's, CPAs and accountants that are great at doing that. I'm talking about sitting down and having a conversation to take a look at what are the strategies that could be implemented in your situation to try to minimize taxes. And I think, we can look at it because there's ways that your healthcare costs go up. There's ways that your investment costs go up. There's ways that it impacts your loved ones, money that's left over. And there's strategies that can be incorporated right now. In addition to that, I would say, I'm not a CPA or an accountant, so you'd always want to work with your tax professional on kind of putting together an overall plan. But if you don't have a 2023 tax roadmap, give our office a call. We would be more than happy to put together a tax roadmap for you. Our number is 419-794-3030. We'd be happy to get that tax roadmap put together for you. But if we dive a little bit deeper into this, if we look at it, there really are some great tax planning ideas that are out there. And these 7 states, again, what they're looking to do is they're trying to tax you on your assets, not just your income.
Right.
I mean, how many ways is the government going to continually come after your money?
Yeah, they're talking about the people in California that are moving to Texas to continue to charge them taxes even though they've relocated to another state. I mean, that's the way the government is just trying to dictate that tax on you.
Yeah, so you have the ability, though. I mean, we hear about it all the time of, all the wealthy people that pay little to no taxes. It's because they have somebody that's keeping them well informed and helping them navigate the overall system. There are strategies that can be done to reduce the amount of taxes that you have now. I think it was the Rockefellers, and they talked about, what was the way and how did the Rockefeller family create substantial wealth, and as they were able to keep the government away from their money.
Sure. There's a lot of people out there. It's just like, when you talk to them about their plans, whether it's insurance, whether it's investments, a lot of the older people like to bury their head in the sand and not look at it. Well, taxes are the same way. It's easier. I can afford to pay whatever I'm paying right now. I don't want to change anything. The problem is you're not doing yourself any favors, and you're probably leaving money on the table that is going right straight to taxes that you could get back in your own pocket, and especially with the way that inflation and the cost of go to the grocery store and things like that, you want to make sure that you're taking advantage of all of the tax options.
So let's give you 5 tax planning ideas for retirees. Number 1, consider tax-friendly states. Retiring to a state with low or no income taxes can result in significant tax savings. Number 2, you want to look at deferring Social Security benefits. Delaying the start of your Social Security benefit, possibly up until age 70, can result in much higher monthly payments, and it can lower the taxable income in the meantime. Number three is you want to make strategic withdrawals from your retirement account. So, whether you're withdrawing money from non-retirement accounts, should you withdraw money from your 401k or IRA, or should you withdraw money? How you make those strategic withdrawals can impact things. Withdrawals from tax-deferred accounts, such as traditional IRAs or taxes ordinary income. Withdrawals from after-tax or taxable accounts, and there's even tax-free potential withdrawals from things like Roth IRAs. Now, in addition to that, here's where they compound each other. So the withdrawals that you take in retirement time can impact and will impact the cost that you pay, whether you retire before the age 65 under affordable health care or whether you retire after age 65 on Medicare. They impact your health care costs too.
Well, there's no question. If you're taking qualified money out as income, that is reportable income, and it could impact your Part B premiums in Medicare. That threshold right now for 2023 is $97,000 for an individual taxpayer, or $194,000 for a couple filing taxes. If you make that or lower, then you're looking at paying the standard Medicare premium of $164.90. If you make over that, so if you take money from a qualified account, which increases your reportable income, you could be paying some significantly higher costs. I have several clients out there that are, they give me a call and they are really, really frustrated with and have questions about how much they're paying for their Part B premiums because of that income. I do have out on my website at americasmedicareassociates.com, if you want to see that chart that will tell you what those thresholds are. I've got that out there. Just visit the website and navigate through there, and you'll be able to find what those income levels are.
Yeah, so when we're looking at it, and we're looking at, again, the wealth tax in retirement, number 4 in ways to try to minimize the taxes that you pay for a retiree is to maximize charitable contributions. And those of you that are making donations, there's certain ways that you can do it. If you're in a situation where you have what is called required minimum distributions, there may be ways that you can donate your required minimum distribution directly from your retirement account to the charitable organization. A lot of people, what will happen is they'll have their RMDs sent to them. Mm-hmm. It becomes reportable income on them. They end up losing, 15, 20, 25% in taxes, and then they donate to a charity. If you meet the certain criteria, and if you're taking required minimum donation or distributions, you can again donate that money directly to a charity to reduce your taxable income. Number 5 is take advantage of tax credits. There's law changes that went into effect with the Secure Act 2.0. That law was passed in December of 2022. Retirees may be eligible for different retirement savings rules than what was in the past. You want to become familiar with those rule changes and take advantage of those tax benefits. So these are just a few ideas, and the best planning strategies will depend upon your individual situation, your circumstances, your income, expenses, investments. It's definitely recommended, again, before you make any important financial decisions, talk with a tax professional for personalized advice. And the final takeaway today is if you haven't got a 2023 tax roadmap, give our office a call, 419-794-3030. Ask for your tax roadmap. We'd be happy to get that put together for you.
And that is complimentary. As 1099s and W-2s are coming in and people are focused on, what they owe in taxes for 2022. That is the rear view, the rear-facing approach, kind of looking through the rear-view mirror as opposed to the taxes that you owe. What you want to do in retirement, obviously, if you still have those coming in, pay your taxes. don't want to skirt away from that. But you need to have a more forward, looking through the windshield and looking ahead to the 30, 40 years and what is the tax landscape going to look like for you and what changes can you make. This is where having that tax roadmap run is critical. That is where having a tax strategy in retirement, especially as 2035 gets closer and closer to the end of 2035 when the tax code as is right now is set to sunset, developing a strategy to make sure that you get to keep as much of your money as possible, and as a bonus, or maybe the first part, Uncle Sam gets as little as possible. 419-794-3030. How you get started with the team at America's Retirement Headquarters, or go online, arhq.com.